We begin with the big economic news of the day. Inflation is continuing to slam the South Korean economy. Consumer prices in June skyrocketed by 6%. That is the largest on-year jump in nearly 24 years. As much of this inflationary pressure is triggered by external geopolitical factors, it seems there's not really much local policymakers can do at this point to stabilize prices. Shin Se-byuck starts us off.
South Korea's consumer prices rose at the fastest pace in almost 24 years in June due to high energy and food costs. Data from Statistics Korea on Tuesday shows consumer prices soared 6% from the same month last year. That is the largest jump since November 1998 during the Asian financial crisis. The June figure marks the 15th consecutive month that the index has risen by more than 2%, which is the central bank's inflation target over the medium term. The rapid surge comes on the back of soaring energy, food, and raw materials prices. By category, livestock prices shot up 10.3% on year, with imported beef rising by around 27% and chicken and pork up by around 20%. The cost of insurance was up almost 15%, rent climbed almost 3%, and the cost of dining out jumped 8%. Petroleum product prices saw an average of almost 40% increase, with gasoline jumping 50% and diesel and LPG rising around 30%. To ease the burden of high energy prices, the government is rolling out several measures, including cutting the fuel tax to the legal cap of 37%. But the latest hikes in electricity rates and natural gas prices are feared to lead to further inflation. So what can the government do to put a cap on prices?
It can limit wage increases, which can further increase prices through wage price spiral. And we can try to keep the expected inflation, expectations of future inflation low, so that when the oil prices and grain prices come back down, as it eventually must, then it'll be easier to control the inflation than when grain and oil prices come down.
Due to geopolitical uncertainties, Statistics Korea said consumer price increases are at a high risk of reaching even 7 or 8%, and that annual inflation could exceed the 4.7% forecast by the Finance Ministry. To tame mounting inflationary pressure, some experts even predict that the Bank of Korea might raise interest rates by a big step of 50 basis points this month. Shin Se-byuck, Arirang News.